Hey everybody, Smart Silver Stacker here. We've got some important developments in the world energy markets today with the EU proposing the toughest basket of sanctions against Russia so far, this one including a ban on Russian oil imports. Now, it's not an immediate ban. This would be phased in over the next 6 months with the goal of ending Russian oil imports into Europe by the end of 2022. And already we are seeing the price of crude oil move up on this news, almost a 5% move up today following this announcement by the EU. And this is going to lead to much higher commodity prices across the board because this is happening at a time when we're already seeing supply chains disrupted. China's got their lockdowns over in Shanghai. We're seeing a variety of raw materials no longer being exported out of Russia. And very notably, this is having a significant increase in diesel prices in the US. Here's a long-term chart of weekly US number 2 diesel retail prices. And you can see we've seen just a massive spike up. Diesel now over $5.50 a gallon. That is an all-time high. And the last time that we saw a spike up like this was back in 2008. And of course, we know that that was the harbinger of a major stock market crash, a major economic crisis, the 2008 financial crisis, and rising oil prices and energy prices were likely a component of that crisis. One of the things that happens when energy prices like this go up is that consumers are not able to spend as much of their income on discretionary purchases because a lot more of their income just goes towards basic things like, heating the house, putting fuel into the tank. And diesel specifically will have a very significant impact on prices across the board because diesel is like one of the master resources in the economy. Anything that's getting transported, all those trucks that are driving around on the highway, shipping food, merchandise, goods, raw materials all around the country, all of them run on diesel. And all of that farm equipment out there that is key to agriculture in the US, all that runs on diesel as well. So this is going to have some major spillover into food, into other commodities. And that I think also includes gold and silver because, if you want to go mine gold and silver, you've got to run a lot of heavy equipment, a lot of excavators, all sorts of things. It's a very energy intensive operation. And so as we see these energy prices spiking up, miners are either going to have to pass those increased costs along in the form of higher prices for their end product, gold and silver bullion, or they're going to have to shut their operations down or their operations will become a lot less profitable. So there's going to be less gold and silver being mined if, the price doesn't move up, and that'll lead to shortage and higher prices down the road. So I think that this ultimately is going to be very bullish for the gold and silver market, assuming we don't get another crash like we got in 2008. But of course, if that happens, the Fed is going to come to the rescue likely with lots of liquidity. And then, I think that'll drive the vast majority of assets much higher, at least in nominal terms. And, we're already seeing the effects of these increased energy prices in a variety of commodities. Here's the 25-year chart for corn. You can see that it is at a record high. The only time it has moved up higher than this was back in 2011, 2012. And of course, that was when we saw the Arab Spring, some revolutions, riots, social unrest over in the Middle East that were at least partially a result of rising food price. Soybean prices as well. You can see this is the 20-year chart, and we've seen a big move up in just the past couple of years. Now, here's the long-term chart for the price of gold. This is a 25-year chart. And you can see that gold, although it has pulled back a little bit lately, is still definitely in bull market territory and is moving up very nicely. It is exceeding its 2011 highs. And, it's interesting if you go take a look at something like this, the GDX, which is an ETF composed of gold miners, they are still a lot cheaper than they were in 2011. So I think there's probably some value to be had in the miners. And of course, none of this is financial advice. I'm just kind of sharing with you guys my thoughts. But the fact that gold is up over its 2011 highs, and yet the GDX is about half of its value from 2011. I think there's some value there, but even more so, I think that we got a lot of value in silver right now. And this is the long-term chart, 25-year chart for silver. And you can see that it is still far, far away from its 2011 highs. I think silver just hit $50 in intraday trading back in 2011, and now we are at $22.59. And with everything that is going on in the world at the moment, I do not think that this price really is rational. The market, I believe, is behaving irrationally here. And this is a huge opportunity for stackers and investors. Of course, again, not financial advice. I'm just a guy on YouTube, but I am viewing the current price of silver as a massive opportunity because it is only a matter of time before these rising energy prices translate into higher commodity prices in a big way, much bigger than what we've already seen. But if rising energy prices do trigger some kind of an economic pullback or a serious recession or a market crash, I think the Fed will likely just come to the rescue with liquidity and re-inflate all those bubbles. And then, of course, I think investors are going to get the idea that gold and silver is one of the few places that are going to be a safe store of value. Now, commodities across the board likely will offer some protection from the inflation that is coming, but I think gold and silver are going to be the best candidates. And at these prices, you can see silver really hasn't risen the way that a lot of other commodities have. And so I still think it represents a tremendous value in the commodity space. And that's why I'm still stacking physical metal. You know, physical is the way to go, I think, as far as silver goes. You want to get your hands on it. You don't hold it. You don't own it and all that. No counterparty risk. You guys have seen the other videos on the channel that I have done on those topics. And if you haven't, check them out. But let me know what you guys think. Is a EU oil embargo on Russia going to spike up energy prices? What's going to be the fallout from this? Are they actually going to be able to go through with it? You know, they depend on Russian imports a lot over there, so it'll be interesting to see what happens as they try to wean themselves off of Russian energy. But let me know what you think in the comments down below. And if you'd like to see more videos like this one about gold, silver, energy, and the economy, then check out the videos that are popping up on your screen right now. And I will catch you next time. Thank you all very much for watching. Smart Silver Stacker, out.